Welcome to Ask Fear and Greed, where we take your questions and do our best to answer them. I'm Michael Thompson, and good afternoon, Sean Aylmer.
Hello, Michael.
Sean, I love this show. I know it's only a bonus episode, but it is so interesting to see the questions that listeners have been asking. And today's is a great question. It comes from Greg. He has sent it in via the website. He went to fearandgreed.com.au and sent it in there. You can also do it via LinkedIn or Facebook or Instagram or any of the social media platforms. But Greg's gone to the website and he says, a timely question for Ask Fear and Greed. He goes, on Monday last week, the ASX tumbled, but there was a lot of talk about interest rate sensitive stocks falling disproportionately relative to the index. Given that interest rates have started to fall across the globe and that the RBA's launch on that rate cutting cycle appears somewhat imminent, the reaction of the market seems totally counterintuitive that stocks sensitive to rising interest rates would plummet when rates are next going to fall. Why is it so?
Oh, Greg, you're assuming rational behaviour.
Oh.
Come on.
It's a common mistake.
Please. That's not how it works.
So basically what you're saying really is that markets are irrational. Is that what you're trying to tell me here, Sean?
Well, no, they're probably rational. It is a cracking question because so many times you say interest rate sensitive stocks fall because of bad news, which means interest rates might fall. But then the next thing, they're doing really well because interest rates are going to fall. So what's the difference sort of thing? Why is that the case? Economists and investment analysts are absolutely known for cherry picking the data. In fact, they take what they want to tell their story. This actually reminds me, I'm digressing a little bit here. The Reserve Bank Deputy Governor yesterday, Andrew Hauser, he was out and he had a real crack. He was speaking to a room full of economists and had a real crack at them. He said economic commentators had created a world of winners and losers, gurus and charlatans, geniuses and buffoons. Those seeing things differently are castigated as incompetent, biased, or on the make. And changes in views are presented as disastrous or humiliating failures. Yes, of course. These people are getting paid to make a prediction. And so they need to make a prediction. And so that's kind of what happens. Back to Greg's question. When you get some piece of data, like weak employment, for example, does that mean the labour market's slowing? Okay, so maybe the Reserve Bank will cut interest rates because they don't want the unemployment to go too high, and that's good for shares. Or does it mean, oh no, the economy's slowing, we could have a recession? Oh dear, that's bad for shares. And that's kind of the nub of the answer of the question. If you get unequivocally good news or bad news, then you do get big shifts. And that's actually what happened last Monday, which is when Greg is referring to. In the US on the previous Friday night in the US previously, there was data on manufacturing, on the services, and on the labour market. All of it was bad news data saying things are slowing sharply. So people thought, oh no, the Fed needs to cut rates. But rather than thinking that's good for interest rate sensitive stocks, it was all about they haven't done enough, therefore we're heading into recession. If we go into recession, the stocks get hit hardest often are those consumer discretionary stocks, the interest rate sensitive consumer discretionary stocks. So it's a fine line, and that's what the sell-off last Monday was about, unequivocal bad news all around. I suppose the bottom line, economists and investors are telling a story to fit their hypothesis. That's what they're paid to do. The best ones don't always get it right, but their analysis is good enough to pay for. So I don't think I can be too critical of anyone not getting it right or, getting it wrong too often, especially if their analysis is good. So I think I've answered the question.
And purely, Sean, from a media perspective, the last thing you want is someone who's going to sit on the fence on everything.
Yeah.
You want someone to kind of give their view, and if they're able to back it up and provide the reasoning as to why they believe that it's going to happen one way or the other, at least it gives you something to work with. And if they show they're working, then you're like, okay, all right, I understand where you're coming from. The last thing you want to hear, if you're listening to the radio or it's just someone going, oh, it could go one way or the other, like, no, just tell me one way or the other. Tell me why you think it and we'll all be happy.
It's a fair point because the media has a lot to blame for this. because the media just wants the headline.
I wasn't saying
Absolutely.
that. I'm not trying to take any responsibility here, Sean.
I suppose what you want is to have that. I mean, it's okay to say this is bad news, but you want the media to give the other side, however, because then you can make up your own decision. That's what I'd say. But certainly the media's to blame too. Thanks for pointing that out, Michael. I had glossed over that bit.
Well,
fairly
that's
nicely.
my sole contribution to today's Ask Fear and Greed. I reckon Greg would be satisfied with that answer. I don't want to speak for him. And maybe, Greg, if you are satisfied, let us know. We've actually had a couple of people come back to us after you've answered their questions and confirmed that, yes, that's exactly what they were looking for. I've never actually told you that, Sean, so I've never delivered that.
I didn't know that.
Kind of affirmation.
Now, we only ever use people's first name, but I know this Greg because I don't know, but I suspect it's a Greg that I used to work with many years ago, and he is a great fan of the show and has been listening for years and years. Do you know what he deserves, Michael?
Oh, you're going to do it again, aren't you? We only got the Mia mugs, the Fear and Greed Most Enthusiastic Advocate Mia mugs, the rare collectible items. We got them yesterday, and you've already given out 5.
Yeah, well, I mean, 2 to my mother, 1 to me. So let's face it, I'm not going to give those out. I'll take those back. No, but Greg, and I'm going to call him Watto, if that is the right Greg that I'm talking about. And in fact, if it is you, Greg, make sure you get in touch. We will send you our new merch. I only received it yesterday. We've been promising it for 4 years, though. So, it's kind of a bit like economists, isn't it, really? Promising one thing, giving another.
And finally delivering. As long as you deliver at some point in the future, then at least you can say, yeah, see, I got it right. Just wrong on the timeline.
Yeah, that's right. But if that is you, Greg, please get in touch and you will be one of the first recipients of the Most Enthusiastic Advocate, a dreadful acronym.
But the spirit of it, though, is fantastic because it's all about kind of then Greg will go and take that into the office and he'll drink out of the Fear and Greed Mia mug in front of other people and they'll all see it and they'll ask him what fear and greed is and then he'll explain and lo and behold, we've got an extra 4 listeners out of it.
That's what it's about.
That's right.
Greg, we want 5, not 4. 5 at least.
Yeah. Aim high. All right, Greg, thank you very much for the question, for sending that in via Fear and Greed. And thank you, Sean.
Thank you, Michael.
Remember, if you've got something you'd like to know, then send it through LinkedIn, Instagram, Facebook, or fearandgreed.com.au. I'm Michael Thompson, and this is Ask Fear and Greed.